Today, we have the opportunity to pass sweeping changes to our tax code in more than 30 years. This historic moment is long overdue, and my constituents in Iowa will benefit from it. Since the last tax reform effort in 1986, the tax code has grown out of control in both length and complexity. All told, taxpayers spend over 6 billion hours annually just complying with the dictates of the Internal Revenue Code. Moreover, our outdated corporate tax system puts American companies at a competitive disadvantage as they try to compete in the 21st century global economy. The Tax Cuts and Jobs Act will make good on our commitment to provide significant tax relief to middle-income taxpayers, both in my state of Iowa and the entire United States, while making the tax code simpler, fairer, and obviously more pro-growth. The bill provides significant tax simplification for the vast majority of tax filers. Most taxpayers will find they're better off simply by taking the standard deduction. No longer will they have to spend hours sifting through receipts and forms to determine what they can and cannot deduct. Middle-income taxpayers can also expect to see significant tax cuts. A median income family of 4 could see their tax bills reduced by over $2,000. This is relief that families will see almost immediately as less tax withheld from their paychecks. This tax relief stems from many pro-family and pro-middle-class income tax provisions in the legislation. First, there is a nearly doubling of the standard deduction. For families, this means the first $24,000 of their income will be exempt from tax altogether. As a result, a significant number of lower-income Americans will be removed from the tax rolls entirely. Second, the middle-income tax brackets are significantly lowered and expanded to include more taxpayers. This includes reducing the current 15% bracket to 12% and the 25% bracket to 22%. Third, the tax bill specifically recognizes the costs associated with raising a child by doubling the child tax credit from $1,000 to $2,000. Furthermore, to ensure lower-income families with children are able to benefit from this expansion, the refundable portion of the tax credit is increased from $1,000 to $1,400. While my colleagues on the other side of the aisle have attempted to claim this tax bill is all out to help the wealthy, I want to make very clear this is simply not true. This is evidence from the features of the bill that I just discussed. But also, if you need more evidence, look no further than the distribution analysis of the bill by the nonpartisan Joint Committee on Taxation of the Congress of the United States. According to the analysis of the Joint Committee on Taxation, on average, every income group will experience a tax cut, with the largest percentage tax cuts going to the middle-income groups. Moreover, the tax bill would provide the tax code more progressive, with taxpayers earning more than $1 million then shouldering a larger share of the tax burden than they do under current law. The bill also enacts much-needed tax relief for job creators. It provides a significant significant deduction on business income for small businesses, effectively lowering the tax rate to under 30%. All small businesses, down to the smallest family-owned corner store and the family farmer, stands to benefit from this provision. As small businesses are responsible for creating the majority of new jobs, this is a key provision promoting economic growth and job creation. Additionally, the bill lowers the statutory corporate rate down from the highest in the developed world to 21%. The highest in the developed world at 35% makes our current corporate tax rate on American companies the highest of those industrialized nations and puts us at a competitive disadvantage globally, costing American jobs. Moreover, and this is important for the John Deere workers in Waterloo, Iowa, or any other corporation, economists generally agree that a significant portion of the corporate tax falls on workers in the form of reduced wages. Now, estimates of this burden of the corporate tax on workers ranges from a low of 25% to a high of 70%. While the exact amount may be debated by economists, one thing is very clear: a corporate rate reduction will result in bigger paychecks for hardworking Americans. These business tax reforms are crucial to getting our economy growing. We can't continue to settle for the anemic growth of less than 2% that we have experienced since 2010. Lower tax rates, coupled with greater expensing of depreciated equipment under the bill, will encourage new capital investments that are necessary to increase productivity, generating both higher wages and higher growth. The bill before us signals the faith that we have in the ingenuity and entrepreneurial spirit of the American people, rather than putting our faith in government to grow the economy. And we do this to get our economy on the right track, and this legislation will put us on the right track. In all, tax reform will put more money in the pockets of middle-class Americans, make U.S. industry and workers more competitive, and get the economy growing again after 8 years of stagnation, the most stagnation in any decade since World War II. This is an historic opportunity to help Americans from every walk of life. I look forward to joining my colleagues to pass this once-in-a-generation tax bill and have it signed into law before the new year.